The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 5. You get the Nasdaq flat. S&Ps are off 2.5. Gold contracts up $1.70, trading at $13.4460. We have silver flat, $17.15. Light sweet crude up 69 cents, $65.43 a barrel. Notes and bonds. 10-year note down 3 ticks, 121.15. 30-year bond down 14, 147.12. King dollar down 89 cents, 88.86. Euros at 124.5 to the U.S. dollar. The yen is at 109.5 to the U.S. dollar. So we had futures down big.
Yeah.
You know,
quite a little bounce, right? I mean, I'm looking at that Nasdaq 100 chart on the right there.
I
quite
know,
a bounce,
man.
At 6,900 as of it looks just after 8 a.m. and all the way 69.52.
You have to love it, man.
Totally.
It's pretty wild. And what you do have, folks, is that we got down with volume. So how this bounce comes in, is it going to be a big deal? You come in with lighter volume, it's going to be a big deal. If we go over to Facebook, now this is amazing, man. So Facebook last night, folks, was trading down $8.
Yeah, I saw right after they kind of came out with their earnings.
Exactly.
Yeah.
And guess what? Whatever they're saying, and our man Dave White, he was saying in the den last night, man, he says, wait for the conference call at 5:30.
Yeah, that everything seems like it'll be okay, right?
Whatever they said out there, whatever, you know, I don't know if it was Zuckerberg was on it or who else was on it, but whoever was on it at that particular point, whatever they said was enough to put juice underneath it. You know, you're taking out the swing high of 190, and it's going to have volume. We got 18 million versus 24. Big number.
Yes.
We go over and we take a look at the Dow Industrials here. You know, yesterday the Dow basically just gave it up, and you know when you take a look at it, we had it was amazing because Boeing is doing it again today. Boeing was putting everything into the Dow yesterday. It was over 114 points.
No, it makes sense, right? $350 stock doesn't take much price weighted, yeah.
Right. So today what you have out here, you got 3M putting 10 negative points, Nike putting 5, United Technology putting 5. Boeing's the leader again. ExxonMobil's putting 3. Exxon announced yesterday, this is pretty intense. So Exxon announced in the afternoon yesterday, well, actually in the morning when the market was open, that they are going to be pumping 600,000 barrels of oil out of the Permian Basin in New Mexico with a total cost, check this out, the total cost, drilling it, taking it out, and bringing it to market at $15 a barrel.
Wow, right?
It's like, oh my God, like, and it's incredible, man. I mean, that is one big number.
I was just trying to scroll. We'll pull it up during one of the breaks, I guess.
It's hard to believe. I was reading this out, and 600,000 is a lot because right now I believe they do 2 point, and that's a day for 7 years. For 7 years, so
pretty remarkable.
It really is. The remarkable thing was that it wasn't pushing Exxon higher too. It was like, you got to be kidding me, man. Bottom line is that, guess what? We got a lot of oil out here, and who would ever think that in this day and age that you could pump oil out though at $15?
Yeah,
right. That's a big number.
Definitely.
Gold contract, we go over to the gold contract, we take a look at the gold contract.
And just as you go into it, though, we weren't, no, stay, you're going to go, I was just going to say, when we were just at $27 a barrel not that long ago, so oil companies better be able to put it out, you know, I mean, they didn't know that oil was going to be at 65, so part of that maybe was, you know, factoring in that we better be able to produce oil at affordable costs, right?
So gold contract, folks, once the Fed came out with their numbers yesterday, well, with their statement, the gold contract decided that it was dovish. You know, gold took off like a rocket ship, went from 1332 up to the 1346. Right now you're at the 1341.
Yeah, no rate hike, but they expect some inflation.
Yeah, right. It's Thursday, right?
It is Thursday.
Natural gas.
Sure.
And we got Bitcoin. Bitcoin's breaking the 10,000 level.
93.
Yeah.
93.25.
Right.
So it was flirting with 10,000. It broke it yesterday.
You can sign out of that one if you want.
That's all right. Okay.
So we're gonna go over, folks, to the Nadex platform. And if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. See the banner on the top, the side. You can walk with us as we trade these defined option contracts. And what we're going to be looking for out here now is a volatility trade. You and Basil, I saw you trade yesterday. That was pretty cool. You had action up and down yesterday.
Yeah, oil had a little bit of volatility at 6.8 million barrels for the surplus. It was only looking at about 125,000 barrels. Okay, so let's jump in here. We'll jump into the commodity spreads. We'll jump into natural gas. Start things off with the 11 a.m.s. Natural gas, we're looking at the March contract. Currently trading about 290, 289.90. And jumping to the 11 a.m.s, they line up pretty well. You're going to look at a 290 spread up to 310 possibly, and then you have a 290 spread down to 270. So you're looking at 20 cents to the upside on your bullish spread, you could call it, 20 cents to the downside on your bearish spread. We're trading 1 penny off of that. So your bearish spread's going to have a little bit of intrinsic value. You're going to have that 1 penny of value to the downside because it's within that spread. You'd be selling this spread, the bearish one, with the ceiling at 290. That's going to cost you about $12. And you'd be buying the bullish one. It's going to cost you about $10.
Okay.
Pretty close, as in, because you can see it's trading at 289, and these are pretty much right at the floor and the ceiling for each one. So
which is nice.
If you took both of these trades, it would cost you about $22, which would represent about 2.2 pennies of movement that you would need away from this 290 price point, excuse me, to break even. So there's our 11 a.m.s, and like we like to just jump around and kind of compare things and see where they line up. So we'll jump to the 12 o'clocks. Now what's nice here is you're going to have the same exact price possibilities, and the only thing you're going to have different is time, okay? So here's our 290 to 310, same exact spread, you just have an extra hour. So for the bullish one, you'd be buying it, it cost you 12. Now compare it again, the 11 a.m. is costing you 10, right?
Yep.
So you're paying a little bit more for that extra hour of time. And then same thing for the bearish spread, same exact price, 290 down to 270, you'd have profit potential. You're selling that one, and that's going to be costing you about 14 versus the 12, right?
Yeah, right.
So you're paying about $2 extra, which is 2/10 of a penny, right? Not 2 pennies, 2/10 of a penny, because these are trading in ticks of 1/10 of a penny is $1, 1 penny is $10, and that's why for the 20 cents that this spread represents is a $200 pie, right? So for the 12 o'clocks, you're looking at about $24. Okay, and let's just recalibrate to make sure you're buying the bullish one, 290 up to 310. There's your 12. You're selling that one 11. So you're looking at about $23, $24 versus about, on this one, we were looking at, about 22. So not much money that you have to put for that extra hour.
Right.
And before we jump around one more, let's just see how, as we go to break, so when we come back, we'll take a look, because even the 8 till 230s, they're going to have a similar price, but you'd have 40 cents of a spread, and we'll see how those price out.
Okay. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now down 32. The Nasdaq is off 3. S&Ps are off 5. We're coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 20. You get the Nasdaq up 2. S&P's down 2. We are talking natural gas, and bottom line is that natural gas came down with some volume yesterday when I pulled that chart up.
Okay. Even since 2 in the morning, we got some action. I mean, it was up at almost 298. Definitely above 297. From there, we're down already about 8-9 pennies just from about 2 a.m. And we'll pull it back even a little bit further because, like you're talking about, I mean, this goes back to, you know, just January 31st. Yeah, January 31st overnight, we're at 310. We're down 20 pennies from there. Pretty remarkable. So to continue the conversation, so we're jumping around. So we went over the 11 a.m.s. Yeah. That would give us about a half hour of expiration time after the news comes out, 11 minutes from right now. We went over the 12s, slightly more expensive for the same type of risk reward, right? We have profit potential for about 20 pennies away from where we're trading at right now. And then jumping into the 230s, we're going to have the same point as in they each start at 290. Now, these are 40-point spreads, though, okay? Yes. So not only are you going to be paying for time, which was the illustration, but you're paying possibly for the extra profit potential because instead of being capped out at possibly 310 or 270, now you would be capped out at 330 to the upside, and realistically, 40 cents of movement by 230. It's very, very rare. I mean, it's almost, I won't call it impossible, right? But that would be an outlier move extraordinaire. But let's see how they line up either way. So you'd be buying the bullish spread where you start at 290 up to 330. And again, we're trading just at about 289 right now. The bullish spread's going to cost you about $20. Okay, now the other spreads will cost you 10 or 12. Right. So you can see that automatically, a lot of what you're paying here for, though, is the time. You're paying for it till 2:30 as opposed to 11 or 12, 2.5 extra hours. Okay. Yeah. Now to the downside, it's going to be a pretty similar trade because we know that it's trading almost at that 290 price point, and on the downside, let's see how these are lining up. Yeah, we're a little bit away. There we go. No. Yeah, this is okay, it's a little bit calibrated. We'll have to jump back into the other ones because this is costing us $31 to the downside, okay, which is that extra penny that you already have value to the downside. Yes. And then to the upside, it's costing us about 18, 16 as this ticks around. So that trade's going to be almost $50. So you're looking for, that'd be 5 pennies of movement you would need, okay?
Before 2:30.
Before 2:30, correct. Right. Now let's just jump back in and see where these 11 a.m.s as this jumps around. Again, to recap, so here's our 11 a.m. going from 290 to 310. Be able to buy it at about 8.
Yep.
Because that's all premium. You have no intrinsic value here. And the bearish one, you're going to have a little bit of intrinsic value. You'd be able to sell it. Yeah, see, this is you know what's happening when we did the first trade there?
Yeah.
Is that there was an outlier bid and offer.
I get it. Okay.
Somebody like us had come in the middle of the market, which was skewing the bid offer, which was why they were so similar. Because really, remember they were lining up $10 and $12.
Yes.
Well, they shouldn't have been so close. And as we talk though, this is skewing things because now we're at 287.7. Okay, we're almost at 3 when we began this. And let's just zoom in on where we were as the market's moving. It's kind of skewing things. These are 5-minute bars.
Yeah.
When we started this conversation at 10:15, we were square at 290.
Right.
Now we're 2.5 pennies below that.
And in the gas market, that's a lot.
It is, and in these contracts, that's a lot, because 2.5 pennies is $25.
Right.
You know, and so that's why these are really, what's really nice when you get to compare these when the market just stays where it is. Because then you get to compare it, and what's really nice is when they line up with similar, not even similar, exact same price spreads, as in 270 to 290 at 11 o'clock, 270 to 290 at 12 o'clock, 270 to 290 at 2:30. What's nice is you get to price time because all other variables are the same.
Right.
You know, and so as the market swings, it's not as easy to compare it. But you know, those are going to be the options. And man, anytime you're making a volatility trade, though, you like to see some market action in terms of a volatile market, and we're getting a volatile market for sure. Just backing it up to, again, this is about the close yesterday, 2:30. We're up at 3. We're 12, 13 pennies below there already, and we have the EIA numbers coming out in about 7 minutes. So we'll see where they shake out. Totally.
And it looks to me that you know, that is a bearish bias. I mean, if we bring this up and just take a look at it, you know, the way that we came down yesterday was pretty intense, and it's been up for so long. I mean, when you look at this, right, we hit a low, what, the 21st at 250, one-way move up to 325.
Good 70-cent run, huge. Especially when you look at from 250. You're talking about 30% increase in the price. Yeah.
Right. And then look at that move yesterday.
Yeah.
Monster.
Definitely.
So it's coming, you know, this is going to be interesting, too, because, you know, I'm not going to do it right here, but it's coming right into support, too. But it looks like 280 is game, which, if that's the case, we're dealing with 289.
Definitely.
Right
now, is this a delay? Yeah, this is a delay, too, which is intriguing. No, I just went because this is right at that 290 as we began to kind of take a look at it. Yeah, and so 288, you know, it's fluctuating a little bit. We'll just zoom it in. Again, these are 5-minute bars. We started kind of taking a look at the market right when it was at 290. And what's always nice when you're trying to make these volatility trades, if you have no market bias whatsoever in terms of bullish or bearish, it's really sweet when they line up right at 290 because you're paying no intrinsic value. You know, because when you start paying intrinsic value on one side, it becomes a more expensive trade that has a slightly bullish or bearish bias because you're paying for that intrinsic value on that side versus where it's just right at 290. You have profit potential up to 310, profit potential down to 270, and you're just paying straight out premium for the option on either side.
Right. Yeah. Can we go over to Bitcoin for a second? Because remember, folks, we have weekly Bitcoin spreads on the platform, and I want to show you something. First, I want to look at the spread. But when I pulled up the Bitcoin, remember we've been looking at it every day about the CBOE versus the CME.
Yeah, I saw you checking that out.
Well, what I think what happened today is that the CME's catching up with it. So that's telling me, that professionals are coming in and shotting the heck out of this thing.
So here is the chart for Bitcoin. Right now we're trading just, let's call it 9,300, 9,302.
Yeah.
Yesterday we were floating right around 10,000 for most of the day. I mean, that is, you know, you can see it was kind of just right around that 10,000 mark for most of it. This is about 2 a.m. We were just still at 10, and since 2 a.m., call it like the last 8.5 hours, been a little bit of a decline. So the spreads open Monday mornings.
This one was a $10,000 spread.
Yep, $10,000 spread. So you're going from 6,200 up to 16,200. So you got 5,000 on each side when it opens. So when this opened, you were at about 11,200.
Right.
Okay? Not even about. You were probably square, you know, right there within a few $10, $20 of it. And you can see 11.2. I mean, that's where there's Monday at, you know, noon, and we're right at about 11.2, right? You can see where it lines up. So, you know, as this begins to skew to the downside, to the upside, let's pull up where this is trading. The underlying is trading at 93.14, and you have a little bit of a skew here, as in it's somewhat bid offer around it. But if you're buying it, you're going to be buying it at 93.70, so you're paying $60, call it more. Yep. But the reason why you're paying a little bit more is because check out that risk reward. Right. You know, you only have loss potential down to 6,200. Okay, so you're buying it at 93.70. You have loss potential risk down to 6,200, and you have profit potential all the way up to 16.2. So there it is spelled out for you. You know, max loss 317, max profit 683.
And if we'll look at this quickly. If when we come back, we'll do the gas. Yep. And we will do Bitcoin, because the CME.
I saw. They're almost right in line with volume.
They are. Yeah. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now into the green. That's up 14. S&P's down 2. Nasdaq is flat. Coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we had natural gas fall 99 BCF.
And the estimate was about 102.
Yeah.
It looked like decline. So pretty close, right? Not too much of a miss. And as we talk about that, there's the current bar, and not too much volatility so far. we'll see where the day shakes out as the market digests. There's always lots to go into.
So far is the word there.
Yeah, no, I mean, we're 49 seconds into the market digesting what just came out. And as that does come out, yeah, that's just the top line number. There's more than just the stockpiles. You know, they talk about demand, right? They talk about a variety of things on those EIA inventory reports and getting a little bit of an acceleration. So now we're about 286, 285. And again, those trades we were looking at, right, when the 11 a.m.s are going to cost us about 20. The noons are going to cost us about 22, 24, and up to, if you wanted to go till 2:30 with 40 cents, they were going to cost you about $50. Well, already you have 5 cents of movement away from 290, which would be $50. So if you wanted to take off the bearish trade, possibly, you could buy that one back and almost break even. Your bullish position for the bullish spread from 290 up, if you got a bounce above 290, you still have profit potential value. So we'll see. But 5 pennies of movement away from 290 is not bad, to put it lightly, in the span of a minute and a half. Right. Yeah.
And, you know, as we're going through this, folks, if you haven't test drove the platform, come over and do it, because what you can do this afternoon, this could be one of the better ones, because what happens is that you have Google and Amazon, which are huge inside the NDX 100. So you do a volatility trade inside the NDX 100.
Don't forget about Apple, man.
Apple's at 430.
Oh, okay. Good point. Okay.
So,
good. I was like, how are you forgetting Apple?
Yeah,
okay.
no, but I wish Apple was before. And what it is, folks, is that the futures close at 4:15. So,
correct, yeah. So let's just jump in. NASDAQ 100, okay, would go into, you have either the ones that are set at 8 a.m. or you have the dailies set the day before. So we'll take a look at the ones that maybe run from 8 till 4:15, and that's the crucial part there.
Right.
So you have, you said Alphabet and Amazon?
Yes.
Okay, so they're going to be released, call it 4:01, right after the market. And here are a variety of spreads. So right now we're trading at 69.43. Let's pull up the chart, gain a little bit of perspective here. 69.43, like we said, got quite a bounce off of that 9 a.m. from 6,900 up to 69.60. So let's just say that the market was trading at 69.50 as of 5 till 4.
That's right. So you want it as close as possible. And
just
that's where you get the trace, which is cool.
Just like we put it up with the natural gas trade.
Yes.
We liked how it was at 290. We had spreads that went from 290 up and 290 down.
Right.
Same thing. Now what's nice is here you have a bunch of different options, okay? So let's say it was trading at 69.50, even 69.45, whatever it be, but let's say it's right around 69.50. You're going to have your bullish spread, 69.50 to 69.80, and same thing. You're going to have your bearish spread, 69.50 down to 69.20. Okay, you'd be buying the bullish spread. Now this is looking for volatility again. You can take both sides of this trade as in. You could be the one selling. You know, you could be the one selling people volatility.
Yes.
If you expect no movement, right? If you accept 69.50, because we're going to be the ones paying that premium.
Yes.
So right now, and you can see the underlying's trading at 69.47. Now, you're paying a lot of premium right now, right? You're out of the money for the bullish one. There's no intrinsic value in here because you only have value from 69.50 up to 69.80, market to 69.45. And still, you're going to have to buy it at 69.62, market's at 69.45. The reason why you're going to have to risk 127 to make 173 when none of that's intrinsic value is because we just moved 60 points in the span of an hour.
So, and for 4:15.
Right, exactly.
Right.
So the probability that you could make the entire profit of this position is relatively reasonable, whereas compared to the natural gas trade where you get 20 cents of movement, that's why there's not as much premium in those, because very seldomly are you going to get 20 cents of movement before 11 a.m. or 12 or even 2:30.
Exactly.
Versus the NASDAQ spreads, when you're talking about 30 points, man, there's a high probability, like you said, especially when they are at 4:15 with earnings.
The cool thing, too, folks, is that as we get closer, like, if you're going to do this, even in the demo account, wait till like 10 of 4, because if the market has been flattening out, that's going to, you're going to be surprised how close you can get.
It is, and you know, just jumping around a bit. So those were the 8 till 4:15s to take. Now those are 30-point spreads in the NASDAQ. Okay, if you jump down to the daily ones, you're going to get slightly larger spreads, 40 points. Okay, but they're going to have different price levels, and that's where you just want to get used to it. Like you said, download the demo account. You can get used to jumping around. So right now we're at 69.48. So for instance, these don't have a price point of 69.50. But if the market's at 69.30, Guess what? They do.
Exactly.
Okay, so that's where maybe check them out ahead of time, see what kind of options you're going to have.
Right.
And again, as we jump back in here, this is where, it's going to be an expensive trade, though, I imagine. There's going to be a lot of premium in here. And that's
there
where
should be.
There should, yeah.
Because they can, what will happen, too, folks, and the reason that this works on the NDX 100 is that both Amazon and Google are very large weighting structures inside the NDX 100.
They're much different.
Yeah.
They're not much different. They're similar volatility trades, but they are different because of the amount of premium you're going to be paying versus your profit potential. So to illustrate, we're 3 points away from 69.50. You can make this trade right now, okay? You could, because you're really close to 69.50. Same thing, you're looking for volatility, but look how much you're going to be paying when you combine both of them, okay? You're going to be paying $260.
Yep.
For only a profit potential of a full, and this is if you just execute one, okay? Now, you could get value on both sides if you wait for one, wait for the other, but the maximum value for one spread at expiration is $300.
Right.
And you're putting up $257, so you really, it's a slightly different trade. Now, the reason why, in my opinion, there's this type of is because you could trade both sides of this before the end of the day, right? You get a pop down to 69.20.
Yep.
Maybe you take a lot of value off to the downside.
Right.
And then you look to keep this position open till 4:15.
Right.
So you have profit potential, in theory, of $600 if they go huge swings.
Yeah.
But that's where it's a different trade. When you're looking at
because
this.
if we had looked at the bottom, that you already had one side.
Exactly.
Yeah.
If you chose like one, like you were saying, with maybe a 6,900 pivot with 30 points up and down, well, geez, you'd close out the bullish one right now for almost full value, and you'd say, okay, I'm going to let the bearish one run, and hopefully the market tanks, and everything from there is. But yeah, so you're putting up almost the full value for full contract, slightly different trade, and that's gonna. The premium is going to come down as you approach 4 o'clock.
Right.
There's still going to be a lot in it, though, because a lot of that premium is going to be in it, knowing that, just like we know, earnings are coming, volatility might be coming.
You gotta love it. And we get volatility. That's the bottom line, folks, which is pretty amazing, which we haven't had in a long period of time. Let's go over and just take a look at that VIX and see how that is playing in the market. So. Look at that. That gave it up. This thing gives it up so quick. Look at this.
Yeah.
So we had got up to 1542. Guess what? Market's still not scared, man. Bottom line, comes right back down to 1366.
Still not bad, 1366, in relative of where we've been for months and months and months. I mean, if you scroll that chart back, when's the last time we've had 3 days above 13, right? I mean, you're going back to August.
It's funny when you look at that chart. It doesn't seem been that volatile. Like, I don't even remember that many pops.
No, right.
You know what I mean?
There
really.
Was a couple days we had some negative action, and then the market shoots up and the VIX shoots down.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 35. Nasdaq is up 6. S&Ps are off 3.5. We're coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 50. You get the Nasdaq up 8. S&Ps are down 4. Gold's up 360, 1346. King dollar is down 279. Bottom line is that this dollar still just can't catch a bid, man.
Yeah, definitely.
Pretty wild.
Definitely.
If we go UPS, so let's see what's going on with UPS. UPS, they did come out with their numbers. They took up a good hit, man. Down 881.
That's for sure.
Yeah, let's see what they have to say. It'd be intriguing. Let's see. So, okay, so let's see. Estimate was $1.66. They came in with about $1.67, right?
Yeah, I would say that this is sees fiscal year adjusted earnings 703 to 737 versus an estimate 754.
Right.
They're boosting investments for growth in 2018. Maybe that's where their earnings are going to suffer. And because they came in with revenue above $18.8 billion, quite a number when you talk about on a quarterly basis versus 18.2. But yeah, they're looking at fiscal year in terms of the remaining year. Maybe they realize I wonder whether that's going to be a spending or a revenue estimate. I'm sure as you get in there, but judging from boost investments for growth in 2018, they're going to be spending more money to try and compete in some capacity.
Yeah, right.
And that's going to hurt their earnings.
I guess the real question is too: is Amazon somewhere behind?
It's always
this, right?
The question you need to ask for sure.
Really. And then so let's go look at FedEx and see if that affected FedEx. It didn't. Look at that. So, well.
No, definitely not. Yeah. Right. I mean, it opened lower, but
but came right back.
Yeah. Opened at 258, up $4 from there, 260, 270.
We get over to Apple. So Apple's 430 today. This thing has come down hard. So this is going to be intriguing watching, can Apple basically get down to this 158? We're at 167 right now.
Yeah, of course. You got, unit sales of the iPhone 10, seeing how that shakes out.
Right.
Be interesting.
And that's, that's big money. I mean, I was listening to, I didn't know that Apple even has a $300 phone. The guy was on Bloomberg this morning saying the SC is $300, I guess.
Yeah, and that was part of the conversation of why they were trying to get into a $1,000 phone, because they want the average cost of their phone to be higher. So even if they don't crush the market in terms of selling millions and millions and millions of iPhone 10s, it's still helping to contribute to their average sale as a higher number.
Pretty amazing.
Yeah.
Some of the higher volume stocks, let's go take a look at some of the higher volume stocks out here. So, look at Facebook, man.
There you go, up $7.
Pretty amazing, man. It really is. PayPal's getting hit. That's down 560. Yeah, did you see what's going on there?
eBay is going to switch.
Yeah.
What is interesting, too, though, is PayPal is still going to be an available option, I heard, till 2023.
Yeah. Well, just think that eBay owned PayPal and they spun it off. That's got to be pretty intense, right? You know,
definitely.
Kicked out the red-headed child. Oh my God.
Yeah.
You know, well, maybe they had some kind of a contract with them.
It is remarkable. I mean, they're still going to be an available option through 2023, which is so far into the future right now. When you think about where payments are going to be in 2023, the whole world could be changed in terms of how we process payments, especially talking about online. So it'd be interesting to see how that really affects PayPal. But, you know, investors are saying it's going to have an effect for sure.
Yeah, no doubt.
Yeah.
We go take a look at the, let's go take a look. So Amazon, let's go look at the King. The King is going to be out here. Down $13.50, which is nothing. It's a $1,400 stock.
I know. I was just going to say, it's pretty remarkable. Just prior to Black Friday, we weren't even at 1,000, and we're already at $14.37. And it seems like we were just in the holiday season. Amazon's up almost 50% from there.
Yeah. What is this? Whole Foods lower price offshoot chain, whose future was questioned after Amazon took control of the company. The business known as 365 by Whole Foods Market opens its latest store in Brooklyn, first location on the East Coast. The division is still signing leases and plans to open at least 5 more 365 sites this year. So this is like a little...
Yeah, it must be.
Yeah.
A slightly different concept from Whole Foods, right?
Right. Interior of the Whole Foods Market.
Smaller and cheaper to build, letting them get into areas that full-size Whole Foods locations couldn't penetrate.
I see.
And man, I feel like it's wherever Amazon can get penetration right now in terms of physical stores, online stores, they don't seem to be slowing down.
And, you know, what's interesting about this one, folks, is that when they open that store underneath their headquarters, that store is only 1,965 square feet.
Now, what is that one called? Amazon Go or something?
Amazon Go.
Is that what it is?
Yeah. And that's where you just walk in, you can do whatever you want. Now, think about that. 2,000 square feet, 19 is very small.
It is. Well, you don't need checkout counters, right?
And Whole Foods probably doesn't, you know, all the garbage that's in the middle of the aisles in big stores, right? Packaged goods.
Yes.
You know, I suspect that's not where they're going. Do you know what I mean? They're going with food to go. Right? Yeah.
Yes.
Healthy food to go.
Yes.
You know.
And so Turnus, who is, I believe, the president of Whole Foods 365, said the Brooklyn store marks the culmination of 2.0 edition of 365. Company likes the look and feel of the stores, and the next phase of growth will focus on improving the product assortment. So yeah, the Brooklyn location just debuted yesterday. Next to an Apple store. They know where their demographic is.
Look at how big the store is, though. In New York, does it say 30,000 feet?
The stores are named for the Whole Foods, which is featured prominently. The company also boosted the amount of bakery items at the 30,000 square foot location and added a butcher. The meat is all still pre-wrapped, but having a butcher on site allows for better selection. So again, you know, you don't have the type of counter that you have at, let's say, Publix that we're used to, where you walk up and you say, I want that piece of meat, and they take it and they, you know, wrap it up for you.
Right.
Because guess what? That's extra time. It's extra. They got the guy in the back pre-wrapping everything. It's right there. You grab it.
Oh, interesting.
You go.
Okay, right.
Right. That's it. I mean, that's because you have a butcher at Publix. You know, you do.
Oh yeah.
They take those big cuts. Maybe they cut you a piece. How big do you want it? Which piece do you want? Etc. But they're doing that. They're just doing it in the back.
And of course, what you have to do is that gets rid of the lines. The worst thing I like. Publix, you can call the deli, order ahead, and that's great. Just walk in and pick it up.
Yeah.
But if you have to wait in line, man, it's pretty intense.
So here's what's interesting, too. He acknowledged some of the changes will boost their labor costs, but said it'll be offset by the potential sales boost. There were also boxes of Cheerios displayed on a pallet, a technique used by the German discounter Lidl and Aldi. The price, $2.99 a box, cheaper than what was available at Walmart.
Wow.
So that's, I mean, maybe that's a loss leader. I don't know how they're, you know, but pretty remarkable if Amazon starts beating Walmart on something as simple as cereal costs.
Yeah.
Which you don't think that Walmart should be beat on anything like
right.
that. Yeah.
Right. And this, evidently, this Aldi,
yes.
This is one of the fastest growing grocery stores in the United States.
Okay.
And it's a monster, and it's like the monster you never heard about.
Okay.
You know, they're from overseas.
Yeah.
But it's pretty amazing. I haven't been to one yet, but there's a few of them going down Seminole Boulevard, going all the way into St. Pete. Because, you know, so that's something that we're going to hear about a lot more, I suspect, in the future. You stay right there, folks. We're coming right back. We have the Dow Industrials right now trading down 31. Nasdaq's up 10. S&P's are down 3.5. Coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks, and we get the NDX 100 creeping into the positive here. And so check this out. You talk about a spread out here, folks. This is pretty amazing when you think about it. This thing, pre-market, you had a high of 69.87. You had a low of 68.98. Look at that move, man.
Solid 70 points below where we were, which is a full percent.
Yeah.
Yeah.
Look at that.
Yep.
So the cool thing is, folks, that's your range, man. Now you get the range set up.
There we go.
That is one heck of a range, right?
And let's jump back in and see where our natural gas contract is trading. That's the NASDAQ 100, quite a run. We'll jump back into commodity spreads, natural gas, pull it up, currently trading at 287, so pretty close. There's the 1030 bar right as the news came out, and yeah, pretty close to where we were. So that volatility trade
flattened it out.
Yeah, pretty close. You know, I mean, if you had taken the bearish trade, would still have $20 to $22 of value right here, right? Because every penny is $10. So you know, you'd still on the 11s or the 12s kind of be at break even, but you know, the play would have been, if you get a move like that, especially if, you know, that's almost 100% profit to the downside if you're trading the 11s or the 12s.
Right.
And like we said, you still would have had 100% profit and profit potential above 290 if you got that spike. Yeah.
Right.
So
no doubt.
If you're trading those, have those orders ready, because the first spike can always be a quick one, and it's not always the move that carries out.
And of course, this afternoon, folks, you know, you can get the demonstration account, you know, before 4 o'clock.
Definitely.
Set it up. As you can see, when we were going through those, there's going to be a whole different numbers now, because bottom line is that you got the juice
We'll see where it is right before 4.
Totally. Stay right there, folks. We got swim lessons coming up next for you. Then our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Of course, it's Thursday, so get our man, Mr. Andy Heck. Dow right now down 24. NASDAQ is up 12. S&P's down 3. Thanks, Bill.
Thanks, man.
Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.